From the leading and most trusted GMA News and Public Affairs.
Social Security System President Romulo Neri is again in hot water as employees of Philex Mining Corporation accuse him of throwing away SSS members' money on allegedly overpriced shares.
Neri counters he's just doing his job and that it's a private company that's actually buying the shares. Tina Panganiban Perez on cue.
This full-page ad, which appeared in today's newspapers, criticizes SSS President and CEO Romulo Neri for his alleged plan to purchase more than 6 billion pesos worth of shares in Philex Mining Corporation. Concerned Philex employees who are also SSS members had placed the ad, saying the purchase will result in losses for the SSS. If the sale pushes through, the ad claims, SSS will have to fork over 7 pesos and 92 centavos per share of Philex Mining, 1 peso and 22 centavos more than the October 6 closing price of 6 pesos and 70 centavos per share. Neri wonders where the computation came from, pointing out that SSS has just signified interest and that it is Manny Pangalinan's First Pacific Company Limited that is actually buying the said shares.
Kung tututong ad na to, hindi ang SSS malulugi kasi wala pa naman kaming pinag-usapang presyo eh. Ang malulugi dito yung First Pacific who is buying the shares, not me, not SSS.
Neri insists he only wrote Philex Mining a letter to remind the company that it should have offered the shares first to SSS, which has preemptive rights since it is a shareholder. Neri adds if he had not intervened, he would have been sued for not exercising the rights of SSS and consequently not protecting its 27 million members. SSS will still conduct due diligence on whether or not to buy the shares, but Neri expects the value of the shares to go up 2 or 3 times as Philex Mining is planning to open a gold mine in the country soon. He suspects this is the same reason Pangalinan's First Pacific is so interested in them. Philex Mining, however, says SSS was informed of the sale.
When it was explained to him by our legal counsel that there was no, they felt there was no legal impediment to it, he did not object.
First Pacific confirmed its intentions to purchase the shares. It has already filed a notice with a stock exchange in Hong Kong where it is based. It expects to sign the deal with Philex Mining by the end of November. Tina Panganiban Perez reporting on Q.
The peso slides again as the global financial crisis continues. Your money's worth today is 47.69 to a dollar. Asian stocks nearly hit rock bottom today with Japan's Nikkei 225 plunging below the 9,000 mark to close at a 21-year low, and the Philippine Stock Exchange Index similarly hitting a 10-year low. The meltdown is in response to Wall Street's losses overnight, with Dow Jones shedding more than 600 points to settle at a 5-year low. European stocks are similarly gloomy on Thursday and fell sharply in early trading today as the financial curse continues to take its toll on markets around the world.
And amidst the global economic crisis, President Arroyo is once again pushing for charter change. Lay Alvis on cue.
Speaking before domestic and international business leaders at the Economist Conference's Business Roundtable in Makati this morning, President Arroyo painted the image of the Philippine economy as more resilient than ever amid the global economic crunch. In the open forum, British Ambassador Peter Beckingham asked the President about the prospects of amending the economic provisions of the Constitution, saying a number of countries believe this will be to the advantage of the Philippines. The present charter bars foreigners from owning land. It also restricts foreign ownership of majority shares in public utility companies and limits the exploitation of natural resources to only Filipinos. The President is in favor of further economic liberalization through charter change.
We have done all the liberalization we can do within the law. So now the next liberalization has to be through the Constitution. And there are now initiatives in Congress to liberalize the economic provisions. Maybe we can ask Congressman Mercado to tell us what these provisions are. This is mostly the 60-40 restrictions.
There have been moves to amend the present charter from the administration of former President Fidel Ramos up to the present. None has succeeded so far, but the President's allies in the lower house are at it again.
The President had been very consistent charter change to undertake economic changes in the protocols or in the constitutional provisions is a way forward. At this point in time, this will have to emanate from Congress.
With 2 years to go before the 2010 elections, many fear charter change may only pave the way for the president's term extension. Malacanang has time and again denied this. Lay Alves reporting on Q.
The discovery of oil or black gold in Palawan could earn the country some $1.2 billion or 57.23 billion pesos in 3 to 5 years. Authorities expect the first shipment of crude to be out in a month. More from Ruth Cabal on Q.
These are pictures of the first time oil flowed from Galloc Field in Palawan yesterday. Today, President Arroyo confidently proclaimed before businessmen that because of this, the Philippines may be less dependent on oil imports soon.
With the Galloc oil field starting its production yesterday, we expect to attain 60% energy independence in 2 years.
The field is estimated to yield more than 20,000 barrels of crude per day, equal to 6% of the country's daily fuel needs. But the Department of Energy says this is no guarantee that prices will go down.
Yung product nito, ibebenta rin at international prices, no? Ang epekto, ang benepisyo sa atin ito is in terms of energy security. Dahil sa pagka nagkagipitan, maski na paano, meron tayong sariling supply.
Under the law, oil indigenous to the Philippines must be supplied to the local market. But Philodrill, which is part of the Galloc Consortium, says crude from the Galloc field, to be called Palawan Light, is of a different quality, so it may not be compatible with oil refineries in the country.
They would want to get the most appropriate crude for their refinery. Different refineries have different setups on what kind of crude they will accept. Okay? So in terms of using crude, it's mostly how economical is it for that refinery to use this particular crude.
Oil refineries in the country are owned by Petron and Shell.
We will just request for samples of the production, the crude oil, and then we will assess it to tests.
Like Shell, Petron wants samples for testing first. If Galloc crude or Palawan Light cannot be refined in the Philippines, the DOE says it will have to be exported. If this is the case, Consumer and Oil Price Watch Chair Raul Concepcion is afraid the country won't benefit much.
We should not sell 40%. So wala na tayo. With the discovery of the oil, we must have policy changes.
Still, the government expects to earn $1.2 billion in the 3 to 5 year operation of the Galloc field. Of the proceeds from oil exports, 60% would go to the government and 40% to the Galloc Consortium. Ruth Cabal reporting on Q.
Hopefully, the Galloc oil field won't be the only place in the country to pump out crude, as the search for more oil is well underway in the Philippines. As of September 2008, the Energy Department has awarded 33 active petroleum service contracts to oil and gas exploration companies. 5 other oil exploration activities are in northwest Palawan. 3 companies, meanwhile, have cornered 4 service contracts each: Narration Energy, Burgundy Global Exploration Corporation, and the state-owned Philippine National Oil Company Exploration Corporation. Aside from these, PNOC continues to be the only Filipino partner of Shell Philippines in the Malampaya Deep Water Gas-to-Power project. PNOC also owns some stake in the exploration, which covers portions of the Ragay Gulf in the Bicol region. Despite the growing number of oil exploration activities, Japan Petroleum Exploration and Malaysian oil firm Petronas pulled out last May for not finding oil and gas offshore Tanyon Strait and Mindoro, respectively.
Consumer and Oil Price Watch Chairman Raul Concepcion says oil companies should further cut pump prices by 6 pesos per liter this month, following the continued downtrend in world crude prices. This, he says, would dispel public speculation that oil companies don't implement a fair pricing scheme. The group also plans to publish oil price averages in various newspapers. The price of Dubai crude has dropped to just under $72.92 a barrel, its lowest so far for the year.
Para matapos na ito, kasi may under recovery, basta instead of yung 6 pesos, because they gave a rollback, yung 6 pesos, gagawin niya lang natin 2 piso sa October 13, 2 piso sa 20th at 2 piso 27. Para ganyan patas na tayo. So sa buwan ng Nobyembro, clean slate,